The world is going through a shock. It's a shock to our system. Stay away from the creative destruction and move into disruptive innovation. Our lives are going to transform in a way that we can't even comprehend now. I saw that the tech and telecom bust and the 08-09 meltdown had put extreme fear into our business. And so hugging benchmarks became the safe way to go. We think that will not be the safe way to go during the next 5 to 10 years. In 2019, the market cap of truly transformative innovation was roughly $9 trillion globally. I mean, $7 trillion. So it was less than 10% of the total public equity market cap. If we are correct, that number during the next 10 years will go to $220 trillion.
Part of what's going on is tax loss selling. That's just a technical factor. Beyond that, I think that the fear of inflation and interest rates rising, especially after Chairman Powell declared that perhaps inflation is not transitory here, has scared the financial markets. This really started in mid-February, this correction. So this is a very long correction for us. We actually think the bigger risk is deflation by far. I disagree with Barry completely on this, and I look at these rent increases as major tax increases effectively on the lower income earners, and the same thing with gasoline prices.
In 2019, the market cap of truly transformative innovation was roughly $9 trillion globally. I mean, $7 trillion. So it was less than 10% of the total public equity market cap. If we are correct, that number during the next 10 years will go to $220 trillion. And in the process of all of this disruptive innovation, will be creative destruction. That is the other side of disruptive innovation, the disintermediation, the disruption of the traditional world order. We've never had 5 innovation platforms evolving at the same time. The closest we can come to this in history has been in the early 1900s, telephone, electricity, and automobile. And those did transform the world. They cut across economic sectors, and they were launching pads for more innovation. You may not believe, but if we're right, your benchmark sensitive portfolio or benchmark aware portfolio is going to be populated increasingly by value traps, stocks that are cheap for a reason. But if we're right, many are going to be disrupted or disintermediated by the most profound changes that have been technologically enabled in the history of the world. And many people will say, okay, that sounds like hyperbole. It is not hyperbole because I saw a dearth of research and investing in innovation in the public equity markets. I saw that the tech and telecom bust and the 08-09 meltdown had put extreme fear into our business. And so hugging benchmarks became the safe way to go. We think that will not be the safe way to go during the next 5 to 10 years. But they are converging. And the kinds of explosive growth that we believe are going to come out of this convergence can be characterized by autonomous taxi networks. Autonomous taxi networks will be the convergence of 3 of these major innovation platforms: robotics, autonomous vehicles are robots, energy storage, they will be electric, and artificial intelligence. They will be powered by artificial intelligence. This opportunity alone, we believe, will deliver revenues in 10 years of roughly $10 trillion globally. The same thing is true of DNA sequencing, robotics, including adaptive and collaborative robotics, energy storage, artificial intelligence, and blockchain technology. And not only is each of these 5 platforms scaling exponentially now, the time is now. The numbers I gave you before were market caps. This is actual revenues, 10 trillion according to our estimates versus 0 now. The government is now investigating regulators, financial regulators, and how they have regulated the financial system. And they're going after financial systems and their regulators. So there is a real, if I can say, it's a bit of a purge going on right now. Quite anti-capitalist, I would say. But there are still ways to invest. So if you think about blockchain technology, that is going to be the kiss of death for the data aggregators that have grown up on the internet, the Amazons, the Googles, the Facebooks. And if Gen Z gets up in arms with the lack of privacy, I don't see it in millennials, but maybe Gen Z will go there. Then these platforms are going to lose a lot of their power. The correlation of returns here is very, very low relative to any other asset base. The highest correlation between Bitcoin and other assets is real estate, and that's a 0.3. That's the highest. If you look at most others, very low correlations. This is what institutional investors are seeking. We had a bit of a pullback this year after Elon Musk put Bitcoin on Tesla's balance sheet, Square as well, MicroStrategy as well. And the pullback was all about environmental. Is Bitcoin going to, is it consuming too much energy? Is it going to create too many bad environmental impacts? Bitcoin is the first private, global, rules-based monetary system that the world has ever known. Performance can be measured every day. Now, do I look at performance every day? Of course I do, but do I take it to heart every day? No, we have a 5-year investment time horizon. But that idea of the financial world, the world is our oyster. We get to study how the world is going to work and invest in it and really play a part in making the world a better place. Stay away from the creative destruction and move into disruptive innovation. Our lives are going to transform in a way that we can't even comprehend now. And in the process of all of this disruptive innovation will be creative destruction. That is the other side of disruptive innovation.